which is what happens on trade. We know President Trump used the world according to trade deficits. The U.S. is the largest importer in the entire world. We import $1 trillion worth of goods. We buy everything from everybody else. He looks at that unfairly, and I think the biggest question is who's next, and how does he look at the world? So here are the trade deficits we have. China obviously is the biggest one. This is 2023 data. Euro area is firmly in the crosshairs, and why he's threatening them next, because they have a $200 billion trade deficit with them. We buy a lot of their stuff. They don't buy as much as ours. There's Mexico, there's Vietnam, there's Taiwan. You're starting to get a picture of how we use the world. They're ripping us off.
But is that the appropriate way from an economic perspective?
Well, most economists will tell you no, not at all. It doesn't necessarily, first of all, trade deficits do not, if you have a trade surplus, like Germany, for instance, or Mexico, that doesn't correlate necessarily with higher GDP. In fact, our GDP is better, and it doesn't correlate with lower unemployment.
GDP, right?
Right. So we're the richest, and we buy the most.
Shouldn't we be buying a lot of the world's stuff?
And that's what we do. But you could argue, here's the flip side, and where he has a point, okay? When you have a trade deficit, that could be a cost factor for jobs, because it means we export a lot of the jobs and the manufacturing by just simply buying those products. And that's something that Trump, I think, has been getting at and very sensitive to. And that's the flip side of the argument. Also, you know, this is an economics debate, right? It leads to an undervalued dollar. There are all sorts of things. You theoretically might have higher borrowing costs, right? Because you have to pay more to borrow. But I think most economists will tell you it's not necessarily a good barometer for fair trade or who's rich, but it is how this president looks at the world, which is why I think it's a good roadmap potentially for what's going to come next. And the bottom line is we're in this universe. Whether he's using it for leverage and negotiations like he got yesterday with concessions, or he's going to go through with it, the bottom line, and here's JP Morgan, and they summarize it, even with the tariffs delayed, the persistent threat of tariffs and the associated increase in policy uncertainty will likely hurt investment decisions and weigh on business sentiment, not only in Mexico and Canada, but potentially also in the United States. And that's the world we live in. There's this sort of persistent uncertainty. I got a good taste of this when I was talking this morning with Ramon Laguarta, the CEO of Pepsi. We were talking about earnings and what he's seeing and how he framed his guidance as conservative. Street doesn't like it. But here's what he said about tariffs. We're concerned by them. There's some impact to the business. We're largely local. In other words, they grow their produce and they sell it to that market. But there's some impact. For instance, Pepsi gets oats from Canada for Quaker Oats. Some of the aluminum and fertilizer is imported. If it's just Canada and Mexico, he says it's small, but who knows where it's going? And that's the key. Also, are we going to be in an environment where long-term structural costs go up? These are the questions that businesses, especially multinational businesses, are asking themselves and trying to figure out if they need to revisit their cost structures and certain decisions that they're making, because this is a threat that doesn't appear to be going away.
Well, Navarro's on the tape right now. He's doing a live event, and he says if we're successful, if the Trump administration is successful on these tariffs, we will structurally shift from an over-reliance on income tax to tariff revenue. But as many have pointed out, you can't cut income tax with a threat of tariffs.
And by the way, as you build up the industries that conceivably you want to build up, then the tariff revenue would obviously go away. I guess, though, you'd increase overall productivity or production, so that would be a good thing.
And prices.
Domestically. and prices, yeah.
Look, they tried this in the first administration, by the way, and the trade deficit actually grew during the first Trump administration. It did shrink with China, but it's not necessarily clear that that would bring back jobs and that they will be able to compensate on revenues, whereas they would get rid of the income tax. I think he's also, you know, they point their finger at Europe all the time with the VAT tax and say it's unfair that they're doing that, for instance, to us, and it's not a level playing field. Just on Pepsi also, since I did have a chance to talk to the CEO, and David, I thought you would appreciate this, because, you know, we're always asking these companies about GLP-1s and what the impact. He went there with me. Yeah. So first of all, he said we are definitely seeing a shift in the consumer toward more health consciousness. There are more conversations happening on social media, and he said, look, these are the trends: lower artificial ingredients, low sugar. Alcohol consumption is going down. He said that actually could be beneficial for some of their non-alcoholic beverages that they have in the portfolio. And then on GLP-1 consumers, here's what he's seeing. they're still eating the products, but they're happening in smaller portions, and that they're looking for fiber and protein and functional hydration. So they are responding in their
That's
portfolio.
not an insignificant challenge, though. Jim and I were talking about it earlier. We did Pepsi on this Mad Dash. It's you've got to really focus on the portfolio and make sure that you're
You're on
properly-
top of those trends.
Yeah.
Right. When you lose muscle, you need protein. You got to be out inserting protein into every snack.
Isn't
Expect
it-
to see that.
You've been with people who are on GLP-1s at dinner, man. They eat they order it and then they
Small
sit
amount.
and then they eat half of it. Drives
I
me
know.
crazy. Can I have that, please?
Meantime, investors are trying to navigate the flood of headlines around tariffs. Our next guest says the tariffs delayed doesn't necessarily mean tariffs canceled, and if implemented, they are likely to deal a meaningful blow to the U.S. economy while putting some upward pressure on inflation. Lizanne Saunders joins us this morning. Charles Schwab, Chief Investment Strategist. Lizanne, you had some great data this morning just looking at trade uncertainty and sort of where we are right now relative to, say, the last 20 years.
Yeah, you know, if you look at the U.S. Trade Policy Uncertainty Index, it's actually spiked up. It's not quite to levels we got during the 2018 trade war, but it's gone parabolic. You know, Carl, I also wanted to pull on a couple of threads that you, as a team there, were just talking about. What's interesting to me throughout these past several days is, and I understand the focus on importers. I mean, they're the actual folks who pay the tariffs. It's U.S. importers that pay the tariffs. But there's been less focus on U.S. exporters. And the export side of our economy is 2.5% of GDP. And especially with retaliations, as announced by China today, I think that has to become part of the conversation. And then to your other point about growth in the economy, the desire, or at least one of the stated desires of tariffs, is to raise money in order to fund tax cuts. Anything that is done to boost the U.S. economy, be it on the tax side of things, deregulation, we are a net importer as a country. So you boost the economy, it almost automatically causes a decline in the trade deficit. So then the question is, what exactly is the yardstick by which the administration or others are measuring success of this? So there's a lot of cross currents
Right.
that we're coming to grips with in the last few days.
I'm glad you mentioned that because some desk notes this morning are diving into government accounting, and one element of that is you can't use tariff revenue to offset tax cuts unless it's codified into law, and no one knows where Congress is on this.
Exactly. Absolutely. Not to mention, if you think of, rightly so, as tariffs as a tax on U.S. companies, U.S. importers, then you're taxing them in one direction, but then the goal is to give them tax cuts, or at least the extension of tax cuts. So there's a lot of murkiness in how circular this is.
So can I ask you, are you impressed with the ability of the bulls to leap through these various crucibles of DeepSeek and tariffs and even the government policy noise we're getting out of DC these last 12 days? Has that been impressive at all?
It has been impressive, and it clearly suggests that there is still that buy the dip mentality. There is still money that wants to find opportunities. Now, keep in mind that in the first month of the year, you have had equal weight outperforming cap weight. So there has been obvious pressure on tech. Tech as a sector hasn't really done much since June, with some gyrations. You have seen some more quiet, stealthy participation in areas other than, say, the Magnificent Seven. So I think that's also healthy, and that was in place prior to what we're dealing with from a tariff perspective. But we still have these rapid-fire sector rotations. I mean, just between yesterday and today, in terms of, you know, tech at the bottom of the list, now close to the top of the list. The defenses yesterday at the top of the list, now at the bottom of the list. I think those sector-related gyrations are going to be with us for a while.
Lizanne, we're just diving into peak earnings week. We'll talk again soon. Good to see you. Thanks.
You too.
Lizanne
Thanks.
Saunders.
Here's our roadmap for the rest of the hour. Shares of Palantir soaring after its earnings beat and strong guidance. How to play the stock from here.
Plus, Elon Musk is shaking up Washington, D.C. We'll talk about his growing influence in government and what it could mean for overall policy.
And one stock that's powering through the tariff threat, shares rallying despite giving a cautious outlook. We'll talk about that name when Squawk on the Street continues after this.